In this video, we talk about a wave 2 strategy, and this is buy the dip strategy. This is probably one of the most simple strategies there is. You've all heard of, I'm sure, buy the dip. Just let the price get low and buy it. But people just throw it around, especially when it comes to meme coins. And it's hilarious reading through Telegram comments about completely dead collections where everybody's aping in, hey guys, buy the dip, bro, etc. When they've just clearly not looked at a chart. It just keeps dipping because the collection is completely dead, and it shouldn't be one you should go anywhere near. So when is it right to kind of buy the dip? So first things first, you need a chart that's had a good wave one. And a good wave one is anywhere where the market cap typically is gone over 100,000. The better collections that have better dips tend to be the ones that have gone over 500,000, 3 to 500,000. Those are the ones I prefer. 3 to 500k, and this one clearly here went to 800,000, so this qualifies. The ones that only went to 100 and stuff, it's hard for them to do a wave 2. There's just not enough market cap. Market cap means there's a lot of people involved in the collection, a lot of people invested in the collection, regardless of the tokenomics. There's just more volume there, and what that means is when there's more people, there's more of a chance we get another pump because there's consistent volume. With the smaller collections that just pump to 100 and die off, it's very, very hard for them. And they're more than likely to do an exhaustion flip kind of strategy move, which I've discussed in a previous video. So how this works is we've identified the collection, so that's fine. So tick box there. And it's pulling back. Fine. Okay, so it's hit a peak, it's pulling back. We're watching it. We may have been involved in the wave one part, we may not have. And we're waiting to see, will it dip and then will it start pushing back? With meme coins pullbacks, they can obviously be more because we've pumped so far in terms of price. So if you actually have a look at this pullback, it's 60%, which is not abnormal. So when I'm looking for a dip, I'm looking for anywhere between 40 and 60%. It doesn't have to be like on the dot 60, it could be 65 and stuff like that. But really 80, 90%, I would be very, very careful with. Because pretty much that's all the value gone off the coin anyway. But then to pull from there and to go all the way up as a buy the dip, no, I wouldn't be interested. I could do it as an exhaustion flip, which I've explained before, and we could do a small flip, but not as a buy the dip, hold a little bit longer, take profit, stuff like that. So be careful with that. This is healthy. Even this is a little bit on the high side. I would have looked for about 50%. But anyway, it was a buy the dip because the price did go back up. And then what else do you see in terms of structure? In terms of structure, you see the downward stairs stopping and then just moving sideways. Now, sometimes in a fast moving collection, the wave 2 can be quick. So it could be a quick V shape and then it shoots off. That can happen as well. But more often than not, it just consolidates for a while because this is a 1 minute chart. So this went sideways, not for that long, really. We're talking maybe 40 minutes, something like that. We went sideways. And then we obviously start attacking the high, ascending triangle, and then we break out. And then when we break out, a few things you have to be wary of. One is when we break out, will we even get to all-time highs? Or are we going to have a lower high? If you have a lower high and it starts dropping, I'm out, I'm gone. And very likely this collection will struggle then because it's not really kept up the momentum. The other thing is if it breaks all-time highs, it might do what this collection did. Just break it by a little bit, by 100,000 market cap. Sometimes it could run to 5 million. You don't know. So you always have to be ready. And this first high, you always take profits. Take profits. Here. 25%, 50%, whatever you think is right in terms of that collection and how it's moving. If you take profit here, because you know there's going to be selling here, you know that at the previous all-time high they'll be selling. And you should have already made from here. If you actually have a look, you calculate. If you got right down here, it's unlikely. So let's be realistic. Let's say we got in at 330, something like that. Took it to nearly a million. It's nearly a 3x. Comfortable 2, nearly 3. So it's a nice flip there from an established collection. So it's not like you're looking for a new collection, checking for scams and stuff, because this one, very unlikely, once it's going into a wave 2, that it's any kind of scam or rug. Because, first of all these new people wouldn't have invested in it, and it already would have dropped in a lot of value and stuff like that. And also for the creators of this, it makes no sense for them to rug from here. And the reason it's moving so much is because it's locked liquidity and burnt anyway. So many reasons, this is like 99.9% chance is safe. Now, there's nothing safe against flooding the community and people just getting bored of it and moving on and stuff like that and panic selling. There's nothing to stop that happening. But from a technical point of view, there's no risks here otherwise. So let's see if we can find another example, and I might show you what would be a setup. Just an example so we can actually run through it. So I'm looking for something that has decent liquidity that launched several hours ago and is still kind of holding on and doing all right. So let's have a look at a couple of collections. So this is one I can show you, but it's actually not a great example. It's just one that's recent, so that's why I'm showing you it. But this one, you can see there's a dip there. So we had the initial wave one up, and that happened in the first, like 20, 30 minutes. And then literally over the next few hours, it kind of dipped down, slowly trending down, all the way back down. But notice that it never really got low, like 10, 15,000 market cap or below. That's when a collection is truly dead. So it meets the criteria, the first criteria. It got a decent market cap. And then on the pullback, it's still holding a decent enough market cap. The only problem with this one is the dips were quite deep. So let's just have a look at the pullback here. So you can see it dropped 80%, which is way, way more than anything I would consider. I would think at this point it's probably dead. But let's just say for argument's sake, you're watching it. Because remember, some of these collections, they have some new news, they do some new marketing, they put it on Soul Trending or something like that. Fair enough. It can still turn. You can just look at the price action. As soon as you see at the bottom here, wherever the point is, and it's very hard to know when that point is. And this, like I said, it broke all support levels. So it got very, very low. So this is very unlikely to happen. But anyway, let's say you see it live and you're like, hold on here. It's breaking the structure. So the previous swing high, which was here. So let's say that may or may not be the low. We don't know. For example, let's say we were over here and we think this is the low. We need to break the previous high. We need to break this one. We didn't. So we pushed down. Now we need to break this one and this one. We didn't. But here, we're now going sideways. So that's good. We calm down with the absolute crazy selling. And then we break this first peak. That's good. We're now going upwards in terms of stairs. So I wouldn't be involved here. But if it gets to about here, I'd be like, okay. Could there be a little flip involved here? But then even then, to be honest with this one, I still wouldn't have gone into it, even though it obviously ran, because it might just get to 150 or 200 and then fall apart. We don't know. I mean, sometimes you can just buy the dip anyway. And if you're holding in profit, that's fine. You let it run as long as it wants to run, and then it will get to where it wants to get to, and then it might fall back down. And in this case, it got to 500. So technically, it actually broke all-time highs, which is why I always tell you, take profits at all-time highs before. You're taking it before. And then this one just broke above, and then everybody sold. And the thing is, with this one now, do we think it's going to have another leg? It's literally sold off all the way back down to 140 again. Again, not a good sign, but I would need to research, look at the socials, have a look and see if this is actually a decent meme. It actually has some good potential. All of these things I would need to check. But the buy the dip strategy is very, very simple. You can use it anywhere. Well, wave 2 is the best. So if you really think a collection has legs, it tends to be, like I said, the bigger collections, 300 to 500 market cap. The dip is usually not that much of a dip, maybe 50% or something like that. And then you start getting the structure where it starts breaking up again and you start seeing sideways or stairs going up. Then yeah, take a little position, get into profit first. And then once you're in profit, let it run as long as you think it's going to run. Mark the previous resistance levels and then mark any psychological ones like 500,000. Very psychological level. And then make sure you take in profits along the way. And that's it. Very simple strategy, very effective if used the correct way. Thanks.